I want to move into our next segment. We're going to talk a little bit more about a theme that we've touched on in prior episodes, and that's going to lead into the 3 companies that we're adding. And that theme is high bandwidth memory. Again, we don't want to go too down the road of nerding out and getting too technical, but let's talk about what this is a little more specifically in the world of AI, why it's important, and then bring back in the companies that we're going to be adding to the portfolio and how they fit into that trend.
Yeah, I had someone shoot me a text this week saying, "Hey, high bandwidth memory, is this stat correct? That's going from a $4 billion to $130 billion market?" I said, "Yeah, maybe that's what I should just lead with in our next show." So that's what it is. A market growing by 26-fold or whatever the number is. So if your ears are, if you find yourself zoning out any part as I'm talking about memory, just remember, we're bringing this back to a 26x growth market. So the other opportunity that's really worth understanding is forecasts for this market are accelerating at extreme rate. I was watching a video on it the other day using mid-2023 market forecasts, talking about the market getting to 6.3 billion by 2028. Well, this year, the newest expectation from Goldman Sachs is 36 billion in 2025. Yet, the number one company at the center of this trend trades for less than 6 times this year's earnings. So, for anyone listening, when you have a market that's shooting up past consensus at an extremely rapid rate, when you maybe don't have that price in the stocks, it's going to equal an opportunity to make money. So let's talk about memory quickly. Most people, they don't think a lot about, David, computer memory. You might know Intel inside with your computer, but if you've got RAM, you're saying, well, I've got 32 gigabytes. It's just one single number. There's not the enthusiast market or recognition you have with NVIDIA chips or Intel, because memory is a commodity. Because it's a commodity, people kind of discount how large this market is. It's nearly 30% of all semiconductor revenue, yet the value of these companies is maybe a few percent of what semiconductor companies are worth. And again, that's because there has historically been little differentiation, and it's a brutal market in terms of price competition. Now, what's changing? Today, 3 companies, Micron, Samsung, SK Hynix, have 95% market share between them. They essentially control the entire market. Now, headed into the age of AI, the challenge with memory is there's no Moore's law. When we're talking about chips, at its simplest point, it's just make the transistor smaller, right? You're kind of optimizing to one thing. Memory has a few different things you need to balance towards. You need to balance towards capacity. You need to balance towards bandwidth. You need to balance towards latency. What happened was the only thing that most applications cared about was capacity. So we improved capacity in the last 20 years, 128-fold, but bandwidth, we only increased 20-fold, which is 6 times less. And latency, we improved 30%. we essentially stopped improving it. So what happens is, because memory has been kind of optimized towards a lot of consumer applications, and now we need new applications with AI, you're hitting something called the memory wall, where memory isn't good enough for running these kind of large AI models. What are some problems with memory as far as AI? Well, it wastes a ton of energy. I saw a stat from a YouTube channel named Asianometry, which is great. And if anyone's interested, could subscribe to that. It said 80% of Broadcom's chips, which is the one designed for Google, the power waste is the connections and moving data around between chips rather than the actual computing of the models. The other thing is memory itself. It would end up consuming a majority of power just through memory if we didn't come up with a new solution. Now, the other thing is too, memory, because I talked about that slowness and bandwidth that hasn't kept up with capacity, because that bandwidth is lower, you waste processor cycles because they're waiting for data to come in and out. So it's a bottleneck is what it is. And the solution has to be found because there's just too much money at stake. And the solution is high bandwidth memory. And what high bandwidth memory does is it stacks memory directly on top the actual processor, and then you actually drill these infinitesimally small connections that have the memory connect directly to the processor. Now, David, as you can imagine, that adds complexity. But when you're a commodity market, you've been begging for complexity, right? That gives you a way to actually start getting margins. So let's just quickly summarize kind of everything here. Memory, it's a huge market. It's bigger than anyone realizes, 30% of all chips. It was developed in a way that was very inefficient for AI. And high bandwidth memory, it's a complicated packaging, but it solves this bottleneck that we've broken down. Now that we've established what this market is that we're looking at, I want to talk about why people are going to make money from this in our estimation. As we noted earlier, forecasts have gone from 6 billion in 2028. The forecast for this year were previously 29 billion from Goldman Sachs. They just got revised up to 36 billion. I think it's going to continue even going higher. Now, what's the reason that these forecasts are shooting up? Well, it's these new models. And there's a phrase in AI called context windows. And it's basically the amount of text or tokens that an AI can remember at any given time. And the larger the context window, the more memory you're having to utilize. So the more non-technical point we could bring up is when you're actually running these models, what we call inferencing, and we've talked about, memory now becomes as important, if not more important, than the chips from NVIDIA and these AI accelerators. And now we need to remember from these recent episodes, David, that the breakthrough that we've seen is running more inferencing to make models better. So again, I can stop here, but what we've established is the size of the market. Recent model changes are moving things to inferencing, and within inferencing, memory is significantly more important. So as we continue putting more and more investment in these models that are new, which right now there may be a small fraction of spend, we're going to see the memory market skyrocket. So David, I'm losing my voice. But I want to give you a moment to pause and, double click on any of these areas, or else, we can start getting to some of the stocks we're going to recommend today.
Yeah, I want to get into stocks in just a second. And you talk about it being a commodity, trading at a low, price to earnings multiple. So when you think about investing in this space, are you taking a basket approach to saying, I'm not sure exactly who's going to differentiate, so I'm going to, put a couple bets because I might be wrong? Is that the way to think about it? Or how are you kind of narrowing down the universe to be like, okay, these are the ones I actually want to invest in? Because what if you pick the wrong one and it doesn't differentiate and it loses market share and becomes, an even worse commodity that just gets left in the dust? How are you thinking about picking these companies?
Yeah, that's a good question. I've had about 10 companies that I've zeroed my research in on. I think it's kind of a multi-tiered strategy that, it's interesting. We're talking about this high bandwidth market that's forming. The exposure from some of the memory companies like SK Hynix and Micron as a percentage of their business might be lower than some of the suppliers, these equipment companies that specialize in building equipment specifically for this advanced packaging where you can stack the memory chips
right
on top of the logic.
More of a pure play.
Exactly. So you can actually find better pure plays than the memory companies themselves. So we're definitely going to take a basket approach to this. I'm going to recommend 3 different companies today. $40,000 of investment out of $500,000 total. Could I see us going up to 100K in memory this year? 20% plus the portfolio? I definitely could. But I just want to get a starting point. And from there, I could see maybe 6 or 7 different companies from kind of this memory opportunity being within the portfolio itself.
Okay, let's jump into what's the first company that you want to talk about here?
Yeah, so the first company, GAM Tech.
Which we talked about last episode.
Anyone who listened to our bonus episode last week is going to hear some repeating. I will say just a little helpful area for anyone listening today that If you prefer reading, if you go out and search 3 AI stocks that could double, or you search 24/7 Wall Street, go down. We've got a section for our $500,000 AI portfolio. You're going to see a write-up on the memory market, Camtech, other stocks that we're going to discuss today. You can also go to an article we've created called How to Follow Our $500,000 AI Portfolio, as a spreadsheet to track our performance. It has frequently asked questions. So if you're listening to this podcast, if you're relatively new and it feels like kind of drinking out of a water hose, hearing about all these companies, we're trying to create resources to be able to catch up and follow along through, what we think is a really exciting time. So
yeah, we'll put that link in the podcast description too. So if you want to just tap the, if you're listening on your phone, tap it and you'll see the link right there.
Yeah. And so Camtech, we've talked about semiconductor equipment. I broke it down 2 episodes ago now, but basically you've got large companies across all the different verticals, and you normally have 2 or 3 main competitors. It's a really good competitive position. It's why these companies are worth a lot and generally have great profit margins. So when you're inspecting chips to see essentially if there's defects in them, it's a space called metrology. The number 1 stock is KLA. They're worth about $100 billion. But whenever you have these big technology shifts within semiconductors, it gives an opportunity for new entrants that are specializing to be able to come in, steal a lot of market share in that area, and effectively compete against these 800-pound gorillas. So Camtech has specialized in this advanced packaging that we're talking about needing for being able to stack memory on top chips, and frankly, where most of semiconductors are going in general. So as we know in our last podcast, they're a tremendously successful company. They're up 50-fold from the bomb in 2016, but the wind's at their back. I believe that they're going to be able to see some impressive growth, especially in the back half of the year as we're going to take capacity up in this HBM market. They were trading as high over $140 a share. Recently, they came down export controls. So that's a threat, but you're getting a cheaper price. David, I was kind of upset because on I think it was Tuesday, I was trading for $80 a share. I looked today, it was up around 100. That's a shame. But I still think a great opportunity. We love its potential in the year ahead. So stock number 1 is Camtech. It's worth about a little less than $5 billion. Its ticker is CAMT.
All right, let's move on to number 2.
Stock number 2 is SK Hynix. Right now, they are the leader in high bandwidth memory. They're NVIDIA's largest cost center. They've got a great relationship with NVIDIA. Samsung's been racing to catch up with them. They claim they'll do it next generation. They said they won prior generations, were unable to. The headline figure is...
What else are you going to say, though? We give up. We'll never catch it.
So the headline figure is they're worth a little less than $100 billion. Their profits for this year are expected to be $18 billion. That's 5.5 times earnings. Now, most people would say that's insane. Well, some of the background is, again, memory traditionally is extremely cyclical. So if you're a leading memory company and you're trading at 7 times earnings at a peak, that's generally not crazy because it's at a peak and it's going to come back. Then you throw in that they only trade in Korea, which gives them a discount of maybe 20 or 30%. You arrive at 5.5 times earnings. So there's some logic behind the market. But my bet is 18 billion. This year, 2025, it won't be the peak because I believe that we're going to see a memory super cycle unlike anything we've seen before, especially thanks to the growth of HBM. So I think this company is going to be cheap. I think if they did do an ADR and they made it easier to list in the United States, they could have an incredible catalyst. I don't know if that'll happen. But the biggest downside right now, you're going to have to likely get an interactive broker's account if you want to buy the stock. It's more complicated. And that's what was holding me off from buying them. But David, I will reveal our third stock right now. And that's Micron, which is ticker MU. And Micron is distant third in memory market shares, 20% in the worst of times, 25% better times, bounce around there. They're going to aim for the same amount of market share in HBM. Now, they're worth more than SK Hynix, despite being a good bit smaller. SK Hynix is looking at 18 billion profits this year. Micron is $7 billion according to Wall Street estimates. Maybe they top it if, dynamics in the industry break right. But I could see them, at 10 to 15 billion in 2026 if this cycle continues as I think it might. So is it more expensive than SK Hynix? Yes. Would I rather own SK Hynix? Yes. But if you go into Robinhood, if you go into Schwab, you can type in ticker symbol MU, you can hit buy, and it's extremely simple. So I want to add this as another option to give investors exposure to the memory market, because again, Micron's going to trade at a premium because it's so much more accessible. So David, there it is. $40,000 total, 10,000 Micron, 10,000 Camtech, 20,000 SK Hynix. We'll start our memory play out. And you had asked earlier, are we going to keep looking at other companies? Yeah, some other peer plays or companies with high exposure. Onto, Form Factor, I mentioned those last week. Another international company I currently own already, but I think has great exposure to these trends. BE Semiconductor, ASM. So there's a lot more companies we may continue adding, and it might be a situation too if interest rates cause that short-term rip down. This will be one of the first markets we'll go to, because I think it's going to stay red hot regardless of where the interest rate situation is.
All right, sounds great. Those are our 3 additions to the portfolio. I think that takes us to 18 companies in the portfolio. Again, click the link in the podcast description, or go to 247wallstreet.com. You'll see it right there on the main page. You can see the full portfolio.